Hi, I'm Jason Jessup. I'm the CEO of Magna Mining. Magna is a Sudbury-focused nickel copper PGM exploration development company with two significant assets here in Sudbury.
Two, indeed. Well done on the getting the Denison project over the line. Look, last time we saw you, 31 cents up to 47 cents. Market reacted really positively. Not, I suspect, to just getting that deal closed because you had announced it previously, but more about the resource you put out. I mean, tell us a little bit about that.
Yeah, we're really excited to get the resource out. Obviously, get the deal closed and release the resource. This resource has been compiled from the more than 90,000 meters of drilling that's been completed since the mine closed, as well as taking into account the historic drilling that Inco did previous to the mine closing. So a lot of information. It's been within a large company and really kept confidential and private. There hasn't been a lot of press releases or news about any of the drilling that happened over that 15-year period that was being explored by Lonmin Canada. And we're just thrilled to get it out there. It's a very significant resource. And now our global indicated resources between our two projects here in Sudbury are more than 51 million tons. So we're really excited.
It's a great start. Okay, Shakespeare at Denison. It's really about what happens next, though, right? Because, you 51 million tons, brilliant. Everyone's going to be asking the question, well, so what? What next? You're still sub 100 million market cap company. You've seen a nice little spike, this week. But what are you going to do? What do you do with the data other than just put out a resource? How do you make this thing bigger? How do you make it better?
And that's really, you hit the nail on the head. That's what it's all about. So we've been thinking a lot about our plans over the last few months as we've been working on closing the deal. Really excited to say that drill's been mobilized to site. So we will have drilling completed at Crean Hill this fall. We have done a lot of drilling at Shakespeare, and we're going to continue to drill at Shakespeare. What we see, though, is the real catalyst here is the synergies between our permits we have at Shakespeare and the resource and the feasibility study that was completed at Shakespeare earlier this year. And now combining that with the resource we just announced at Crean Hill to really demonstrate what the economics could look like combining those two projects. So we are engaged with an engineering group, and we'll probably give more color on that shortly to complete a PEA. And that PEA we hope to have completed by early Q2 2023, so in the next 4 months, let's say. And that will demonstrate both, the potential economics of combining the projects, potential economics of Crean Hill, as well as those synergies we see between these two assets. So it's truly, a 1 + 1 = 3.
Okay, well, that's what everyone's seeking, especially in difficult markets like this. I mean, nickel's kind of been moving sideways. Signs that in China and Indonesia, Philippines are trying to make moves. We can maybe talk at the end about bifurcated markets, et cetera. But how do you take advantage of the current market? It's been a pretty difficult year for most companies. You sound like you want to get on with things.
Yeah, absolutely want to get on with things. As part of closing the transaction, we had announced in end of September, we had closed and put into escrow our $20 million financing that fund the acquisition of Lonmin Canada. Also put some cash in our bank account that allows us to move forward. So we have the cash in the bank, and we also brought in a new strategic shareholder, Hawks Point, which are, we believe, a very good supportive shareholder, currently hold about 12% of the company, along with Dundee Corp, run by Jonathan Goodman, which currently holds about 22% ownership in the company. So between those two cornerstone shareholders who truly believe in our vision for creating this hub and spoke production model here in Sudbury, we do have the support to continue to move things forward. And we think it's a very opportune time to do that.
Right. The hub and spoke component is great, but you've got a few options when you do hub and spoke, because you've got your mill permit. We talked about that last time. That requires capex, requires capital, but you've also got tolling available to you. Hub and spoke route. How are you going to take advantage of that? Because you could go out and make more acquisitions, right, and kind of get the scale, and it's it's about the minerals in the ground, the metals in the ground there, or you say, well, let's kind of move and advance towards some kind of production scenario and get some revenues flowing. How are you managing this, and what's the plan?
Yeah, so we do have a number of options, and being in Sudbury, with all the infrastructure and benefits that go along with that, we do have those options. And as you mentioned, one of those options is looking at toll milling. Crean Hill has significantly higher grade than Shakespeare, and it's closer to two of the operating mills here in Sudbury. So those discussions are ongoing, and the potential to not only de-risk Crean Hill by mining some of these areas along the footwall that we talked about, these lower sulfide, high PGM areas that haven't been mined previously. And mind everyone, Crean Hill is a long time producer, produced for 80 years, 20 million tons by Inco. So it does have a long track record, but the footwall material was never mined before. So looking at a potential toll milling scenario prior to the start of construction, or even during construction of Shakespeare, could be a very, very good option. And this is one of the reasons why we're looking at doing a PEA, to really evaluate all these options, demonstrate the potential economics, as well as also the recommendations on how to best move forward to feed into a future pre-feasibility study.
Right. Obviously, with Hawke's Point and Dundee, they're going to have a longer term view than most of your other shareholders here. And given you're only coming up to PEA phase there, you've got some time. The market will have moved and evolved. Prices may have changed. You've got your view is probably that nickel prices and copper prices will rise during that period. So do you need to kind of accelerate a process through the next kind of phases, as it were? Have you changed the way that you're approaching this? Have Hawke's Point or Dundee encouraged you to reevaluate things?
I would say that they haven't encouraged to reevaluate things. I think they're supportive, and really the reason that they're investing is they're investing in the team and our vision, and very supportive of that. So we are moving things along as quickly as practical. We do want to take a systematic approach. We're not cowboys that are shooting from the hip, so to speak. So we're looking at things in a good mining fashion, making sure that we're doing the right first steps and understanding risks, mitigating those risks, and moving forward. That being said, because it's such an advanced asset, because it has a long history, there's been a lot of technical work done in the background. Lonmin Canada had done a lot of technical work as far as metallurgy and understanding the deposit. So we can incorporate all that and move things along quite quickly. And that's why we believe we can get a PEA completed and published, in 3 to 4 months. So we are moving things along fairly quickly. We have supportive shareholders. And much like my experience here in Sudbury in the past, we're going to look at opportunities as they come about. And those opportunities may be, as I just mentioned, some early mining, some toll milling to better understand, de-risk the project, and potentially, even fund some of the construction of Shakespeare.
Right, and again, with this historic data, that's a lot of meters that you've inherited, and no doubt you're going to go after some new data yourself as well. The nickel is like pretty good grade, sort of at 0.5. You picked up copper is like near down at 0.5. A little bit of cobalt, PGEs, and a little bit of gold in there as well. So you got a lot of byproducts there, but you're going to have to start forming an idea as to how this gets mined, if that's the way that you're going, in which case, how do you, with the data you've got, start targeting more of the projects? I'm particularly interested in the Denison component.
Yeah, so the Denison resource that we released is an open pit resource as well as an underground resource. The open pit resource was done at a 0.3% nickel equivalent cutoff and sits at about 1% nickel equivalent. So as you said, about 0.5 nickel, 0.5 copper, and 1.2 approximately grams platinum, palladium plus gold. So decent grade for an open pit. The underground component is much similar to what was historically mined. So it is, about 1% nickel, 0.8 copper, and about 2.5, let's call it approximately 2.5 platinum, palladium plus gold. So, quite good material. When you look at it all together, you're talking about 2% nickel equivalent. So a very good mix of metals. And, at sort of today's prices could be potentially, very profitable under certain mining situations. So what we're doing right now is a couple things. One of the things we're doing is we are drilling and exploring. And I've learned this from past experiences here in Sudbury. When I worked for FNX Mining and I ran a couple of their operations, these were old Inco mines, very, very similar to Crean Hill. It's, cookie cutter, same style, ran for a lot of years, mined out a lot of the main contact mineralization, didn't do much exploration in the footwall, left a lot of other smaller pods and remnants, very similar to Crean Hill. And what we discovered at FNX was footwall deposits. And so we are going to be doing some aggressive exploration and using the experience of our team, which a lot of them are former FNX geologists, to explore the footwall to find more high-grade material that will hopefully enhance a future mine plan. Again, a lot happening right now. As I said, drill's going to be turning anytime. Expect to have sort of first results, before Christmas. So we will be exploring, we will be looking at mining, and we will be, understanding the property a lot better in the optionality around open pit and underground mining scenarios.
Okay, so if we look at nickel and copper, they were sort of the darlings of the metal space at the beginning of the year, and kind of like your share price, people kind of lost interest or lost confidence in the market more broadly. Not necessarily the prices are kind of good, but how do you manage the narrative in the marketplace as to what you're going to be? Who would you compare yourself to? We've seen some names really kind of take off this year and continue to do well, and others have fallen off the side of a cliff. So what are you going to try to be, and how do you get there?
That's a great question. And really, we get asked all the time, how do we compare you to other your peers? And it's really hard because we don't have any peers. There are no junior nickel, copper, PGM exploration development companies out there that are in a tier 1 jurisdiction with permits, with a very significant resource. The contained nickel in the Denison resource alone at Crean Hill is over 500 million pounds. So very, very significant amount of metal and at some very decent grades, typical grades that were mined for over 80 years. So there's no one else that really compares to us. I would say what we're striving to do is recreate that same type of culture and that same type of company that I experienced with FNX Mining back in the 2000s. And I think that, again, our team, that's our experience, that's our background. And Sudbury is very unique. Now there's others out there like Talon Metals that people look at and say, well, look at Talon, your resource is very similar. It's very comparable in size. And when you look at the nickel equivalent grades, it's very similar. Why aren't you valued like them? And, my answer this week is we've just announced the resource. It's going to take a little while for people to digest it. And I think those that are figuring out, the opportunity here are going to do very well.
Right. Okay. Well, while they're figuring it out, you've got to figure out how quickly you can move to a kind of cash flow potential situation, right? And obviously, you're moving through the phases with the studies. Do you get again, because of what do you get to skip a few phases here? Do you get to accelerate the time frame? When is it realistic that you could be in a cash flow position?
Yeah, and it's early for me to kind of give any guidance on that. But what I can say is if the PEA, after we've done the review, looks positive, and if at that time the recommendation is we need to understand some of these other zones better, we want to collect some bulk samples to get indicative terms potentially for toll milling, we could potentially be breaking ground and doing some of that early stage mining and early stage infrastructure development, possibly by the end of Q3 next year. So there is a lot of, just because of the advanced brownfield nature of the project and our experience here in Sudbury, there is a great potential to move things along quickly if that's the right thing to do. Again, cash flow positive position in commercial production, I'm not going to give guidance on that right now, but we could, much like what FNX did, move things along fairly quickly and through toll milling, what we believe could be relatively low capex, move into some sort of production within a reasonable time frame.
Right, and what does that mean for Shakespeare project? Because obviously there's the new kid in the block. Everyone's excited about the Denison project, but in terms of going through the study phases with Denison, you're going to have to obviously be looking at how you bring that or you can benefit from, I guess, a more efficient process by including what's going on at Shakespeare. So hub and spoke sounds nice. It's actually hard to manage timing wise. So how do those things work together? And will there be another spoke coming along anytime soon?
Well, the hub and spoke production model is standard practice here in Sudbury. So Vale has one mill, Glencore has one mill, and both those mills are fed from multiple deposits, and they have been doing that for many decades. So that is pretty standard practice, trucking ore across the camp and in and around Sudbury. So what we're envisioning doing here with Shakespeare and in Crean Hill is not something new or not something out of line. So it's from a logistics perspective, it's very straightforward. From a timing perspective, the question is, when do we actually say we're breaking ground, we're going to start building Shakespeare? And that's something we need to figure out. Now, there is work we want to do as part of this PEA, and we start looking at the synergies. There's going to be questions. And one of the questions is 4,500 tons per day, which is currently what is in the closure plan and permits for Shakespeare, the right size? That's a real good question we have to look at. And what could it be? What is the right size based on these two resources that we currently have? So there is lots of work to still do to kind of optimize and see where we want to go with it. And hopefully over the next 3 to 4 months, we're going to get some good clarity on that.
Okay, and what's your hope for share price now? Because obviously you've seen a really nice reaction from the marketplace, but things will settle down. They always do, because it's going to take a bit of time for you to hit the next catalyst, the next moment along the journey that you're going on. Do you need to kind of give the market a few exciting things to look forward to? If you do X, Y will happen? Or is it you're kind of happy with your lot right now, given the market conditions?
Well, I think that the market is, just starting to digest the story. And, Matt, we've been talking for a number of years now. And some of your viewers are familiar with Magna, but there's a lot of people out there that still aren't familiar with us, especially compared to some of our larger peers that are in the nickel space. So we think once we get the story out there, there's still lots of value, I guess, to be unlocked, be recognized by shareholders. We do have a fairly tight shareholder structure. As I mentioned, cornerstone shareholders like Dundee and Hawke's Point, they're long-term shareholders. Management still holds 14%. So if you look at the approximately 34% that's held by Dundee and Hawke's Point, and you add 14% of management, you almost have 50% of the stock tied up completely. And as well, we have a number of other long-term shareholders who believe in our strategy. So when people want to get into the story and they want to buy in the market, and right now we have cash in the bank, so we're not looking to do any more private placements in the short term. People are going to have to buy in the market, and if there's not a lot out there, it may go higher. That being said, one of the great catalysts that we think that we're really excited for is with exploration. So, if we can be successful and test some of these footwall targets we have, and continuations of the 109 footwall zone, these high PGM zones that could lead to typical Sudbury high copper, high PGM footwall deposits. There's great catalysts there, and FNX is a great example. It's been a long time since somebody, a junior, has really been in the Sudbury camp proper and just made a new discovery. You just don't hear about them because companies like FNX were acquired and then became parts of giant international conglomerates. So there are lots of catalysts, we believe, over the next 3 to 6 months that could have major game-changing opportunities for shareholders in our company.
Absolutely. And so going into a market like that, I know you would not claim to be a market commentator as such, but you must have your eyes and ears peeled as to what's going on over there in the east, which is, you're talking about Indonesia, Philippines, potentially China, kind of creating the equivalent of OPEC for nickel. ONEC, I think they're calling it, ONEC. Obviously, implications for that are huge. And probably quite good for Western companies as well. So, how much credence do you put to that, or how much credence do you give that? What do you think the sort of timing of something like that could be?
Yeah, and those are all great questions. And I never claimed to be an expert in nickel, but like most people in my position, I have an opinion. And I think that definitely just the signaling that there could be an OPEC type organization formed to manage, the nickel supply coming out of Asia is extremely interesting. When you start comparing a commodity like nickel to oil, it just shows the importance of it. And this is being viewed globally between many developed countries, and people realize the importance of nickel and what's required going forward. We're seeing it here in the U.S. and with grants that are given out to promote domestic supply chains for battery metals, and the Ontario government is right on board with strategic metal strategies and supporting development of new projects. So I do believe that, there's going to be increased demand, and I think everyone can agree in that. I do believe there's going to be challenges in ramping up supply as quick as that demand. Now, sure, there's lots of laterite, nickel deposits out there and money being invested to bring it forward. The challenge will be, how do you use that nickel? Is that going to be used for primarily stainless steel, which is still the biggest demand for nickel, or how much of that can actually be used in battery manufacturing, and will that ever come to Europe and North America? And I'm very hesitant to say that it will. So I think that projects like ours that are North American or even European nickel supply, that is sulfide nickel, that is done at very high ESG standards to supply the European and North American markets, I think is going to be in big demand. And I am truly bullish on nickel. I think that we're seeing it right now, even in these tough markets. Nickel prices are hanging in there. Nickel, I believe, is over $11 US a pound today. It's going to have volatility. It's going to bounce around. But I truly believe that $10 US nickel is the new bottom. And we could easily see nickel above $15 a pound US before the end of next year again.
Yeah, I think I agree with that. It's been bouncing around the sort of 10, 12 mark for a few months now. Be interesting to sort of see if it can sort of find this lower or higher low, as they like to call it. Well, and it's just one other thing is, and again, come back to how do you take advantage of these moments? Because it's we talk about oil being geopolitical, talk about uranium being geopolitical, but the battery metal side of things is also heading that way in terms of these bifurcated markets and ecosystems and North America. You've seen, and I guess also in light of the Canadian government basically telling Chinese companies to get out of Canadian lithium companies, is you and your North American friends to the south seem to be forming alliances and allegiances. So are you going to be listing on OTC anytime soon, or making your stock available to the US?
Yeah, I think that we have had internal discussions about listing on the OTC, and there's been quite a bit of interest from U.S. investors asking that same question. So although I wouldn't say we have a firm decision or have applied yet, it does seem like the logical thing for us to do in the coming months. And now that we're a larger company with the acquisition of Lundin Canada, I think we'll have that size that really starts to make that matters and has that critical mass for the U.S. market.
Brilliant. Okay, well, Jason, I just wanted a kind of quick catch up. Say congrats on the acquisition, and more importantly, the resource. That's super exciting. Can't wait to see what you do next. So stay in touch, and we'll speak to you soon. Okay.
Thanks a lot, Matt. Hope to speak to you soon.